So thanks again for joining us for today's session. A little bit of housekeeping before we get started. So the session is being recorded and we will make the recording as well as the slides available to those on the call in the coming days. So do keep an eye out for those. In terms of questions, what you'll find at the end of the presentation is my contact details. So if there is any questions you want to ask, please don't hesitate to reach out, and obviously more than happy to answer anything that you have. In terms of the session today, we're also coinciding this with the release of our Q3 2022 market reports, which are now live and published. Those cover 46 locations nationally. And again, if anyone has any questions on those or does want to receive access, then please do again reach out, and as I said, you will find my contact details at the end of the presentation. I'm also pleased to say that we're being joined by Callum today, who's the founder of Student Tribe. Once we've gone through the initial data set, I'll ask Callum just to do a brief introduction to himself, and then Callum's going to give you an update on the HMO market in particular for the season just ending, as well as the outlook for next year as well. So I look forward to hearing Callum's thoughts there as well. In terms of the topics for today's session, we're going to start off with a quick recap on demand growth this year, as well as changes to user search behaviour quarter on quarter. We're then going to go through a quick update on the supply pipeline, looking at some of the most notable applications, for example, that have been submitted in the last quarter. We'll then touch on growth in PBSA this year. Numbers are still being finalised, but we can start to understand how PBSA is changing this year. We'll then move on to UCAS numbers, which have just been released actually this week. And then we'll kind of summarise all of that, looking at what it means for the wider market going forward. So to start with, let's have a quick recap on demand growth. For those of you on the call that have sat on these sessions before, this particular slide will be familiar to you. However, we thought it's worthwhile just giving a very quick update in terms of demand growth for both HMOs and PBSA. So on the chart on the left-hand side, what we can see here is both the seasonality as well as demand growth for HMOs as per inquiries generated by the StuRents platform. Again, we've discussed this before, but what we can see straight away from the HMO charts is that demand throughout the pandemic was very, very strong. This year, numbers are up as well. So if we're looking at inquiries for HMOs year to date, they're up about 24%, which is great to see. So again, really strong demand growth there. Equally, what we can see from that particular chart is that the seasonality of the HMO market is really what we would expect to see, and that hasn't really changed again throughout the pandemic, which is in contrast to PBSA, which we'll see in a minute. With regards to PBSA, which is on the right-hand side, again, something we've touched on before, but what we can clearly see from the chart is that last year, so for the 2021-22 season, the season for PBSA was particularly late, and you can see from the chart we saw kind of a spike in demand really kicking off kind of August time, really running into September, and that's not normal. Obviously, last year the season again particularly late, as international students were essentially delaying their accommodation choices due to the ongoing uncertainty around COVID. For this year, which is represented by the essentially dark orange line, we can see that demand is up, which is great to see. And if we're looking at inquiries for PBSA, they are up significantly, so up about 128% year on year. Now that is from a low base, so that is worth bearing in mind. But again, it's great to see that demand growth for PBSA compared to where we were last year. In terms of seasonality, again, it's skewed to the back end of the season, which is not entirely unexpected. But it's, at the moment at least, less pronounced than it was last year. So it seems as if we're returning to something that we would classify as more normal compared to where we have been over the last few years at least. Moving on, we can then look at search behaviour on the platform and how that has changed quarter on quarter. So this chart on the right-hand side shows of those searches performed on the platform, what were students looking for in terms of unit size. So were they looking for a 1-bed, 2-bed, 3-bed studio, etc. And what we can see from the data is that in Q3, which is actually the April to June period, we can see that 1 beds and 2 beds in particular were the most searched for. Now, if we compare that to the previous quarter, which again is the dark orange bars in this case, we can see that in previous quarter, it was 4 beds, for example, that were the most popular, and 2 beds as well. This is really what we would expect to see. Obviously, typically we would expect international students to be searching later in the season. And again, as a rule of thumb, they are going to be searching for smaller unit sizes, which is somewhat reflected in that data there. And as we're going to move into the next quarter, we would expect that kind of distribution curve really to shift more to the left, again, as more internationals start searching and the proportion of domestic students in particular begin to wane. Obviously, most domestic students would have found their accommodation by now. In terms of just some headline numbers there, so we can see for, again, Q3, which again is the April to June period, searches for 3 beds or more was around about 43% of the total, which is down from about 62% in the previous quarter. So it just shows you how that demand has shifted with regards to unit size quarter on quarter. As I said, we would expect that number to drop again next quarter as smaller sizes become more popular. A quick update on the supply pipeline and plan applications. So again, this is something we've touched on in previous sessions, but again, we just wanted to give you the most up-to-date view. What the chart on the right-hand side shows us is the number of beds submitted, as well as the number of beds approved over a good number of years there. And we can also see the rolling 12-month figure as well. And what you can straight away see from that chart is that we are still at historically low levels. If we look at, again, the quarter just gone, we're seeing or have seen just under 6,500 beds submitted, not yet approved. So these are beds that have been submitted in the last quarter. If we compare that to the same period last year, we are down. So last year, during that same period, you're looking at about 8,400 beds. So again, year on year, we are down slightly. What is worth noting is that year to date, however, numbers are actually up. So year to date, we're looking at about 8.6% growth in the number of beds put forward and around 24% growth in the number of beds that have been approved. Now, particularly around the approval number, whilst that does sound really, really positive, if we compare that to, for example, 2018, numbers are still down about 50%. So whilst they are up year to date, year on year, compared to historical levels, we are still very much lower than where we have been previously. In terms of the current pipeline, we're now looking at about 120,000 beds total nationwide, and that's, again, a combination of beds that have been approved, as well as beds that are still awaiting a decision. Just to touch on some of the most significant developments, and this is by no means a comprehensive list. Obviously, there are many, many more applications than this, so we've just picked out some of the most, let's say, significant ones. If we start off with those that were submitted recently, we can see by far the largest was a very significant 1,700-bed scheme in Leeds, which was put forward by Urban Knights. Elsewhere, we saw a pretty large development in Sheffield put forward, so about 380 beds. Dundee saw another development submitted, so about 240. Dundee's been an interesting one. Historically has not had much application activity, but certainly seems to be gaining more traction there with some relatively large developments being put forward recently. And Watkin Jones also put forward a 290-bed scheme as well in Guildford. In terms of those that were approved, a couple of very large schemes in London. So we can see 1,600-bed development and a scheme that just has over 1,000 beds as well, both in London. And in Leicester, we saw 367-bed development put forward, approved. And we saw, again, a relatively large scheme approved. As I said, this is not a comprehensive list. There is many more than this, but these are just some of the highlights. Looking at how the pipeline has changed quarter on quarter, Leeds saw a relatively large jump, so more than 2,100 beds added to the pipeline in Leeds in the last quarter. That's a rise of about 26%, so pretty significant. Obviously, the development that we just mentioned is part of that, which is going to explain a large portion of that increase. Elsewhere, Nottingham still does have the largest pipeline nationally, outside of London, over 12,000 beds, so pretty significant. Other notable developments, in Belfast, we saw more than 850 units submitted. So the pipeline in Belfast has increased by about 33.5% quarter on quarter, so a relatively large jump. It's also worth noting, so Bristol, for example, still has one of the largest pipelines. I think it's the fourth largest nationally, over 6,500 beds. But growth quarter on quarter was very low, which is why it's not included in this particular chart. Moving on to look at how the supply of PBSA has grown this year and in previous years to see how that compares. What we can see from this particular chart on the right-hand side is the number of new PBSA beds delivered since 2017. And what we can see is that really peaked in 2019 and since then has been declining. The figure for this year is yet to be fully confirmed, but we're probably looking somewhere between 16, maybe 17,000 beds added to the market this year. And again, if we compare that to 2019, it's down significantly. We can see somewhere around 37,000 beds added to the market in 2019. And that really follows the trend that we saw on the previous slide, whereby the amount of activity taking place, both the number of beds approved, as well as those being submitted, is obviously down. And that's being reflected in the delivery of new schemes as well. Looking forward, whilst the pipeline is relatively substantial, even if all of that is delivered, whilst we could expect an increase in the delivery of new beds where we are compared to where we are this year, we're not going to get anywhere near the level we saw in 2019. So supply growth going forward, again, is likely to be relatively low compared to historical standards. Of course, that previous chart is looking at growth nationally, so it's worthwhile just taking a few moments to look at how that has varied per location. Again, these numbers are yet to be finalised, but gives us a very good idea of growth this year for a few locations we've picked out. Swansea in particular stands out. So year on year, PBSA supply in Swansea is up by around about 18%, so a significant jump, albeit from a relatively low base. Leicester's seen relatively large growth as well, over 1,500 beds, and equally Nottingham as well, seeing delivery of over 1,500 beds, albeit the percentage increase in Nottingham is lower at about 5.8%. So again, whilst nationally growth has been slowing, it does vary significantly per location, so it's worth bearing in mind. On this particular slide, what we also wanted to do is just compare that supply growth really with estimated demand growth. Obviously, supply growth is only one side of that equation. And what we've done here is really just highlights really the misalignment between supply growth and demand growth across just a couple of locations or a number of locations in this particular slide. And this is a somewhat simplistic way of looking at it. Typically for customers, we'd run much more detailed sensitivity analysis. But essentially, if we look at somewhere like Preston, as an example, what we have done on the chart is we've estimated the number of new students requiring accommodation that are or have come to the market between 2018 and 2022 versus the change in PBSA supply. Now, what we can conclude from that, again, relatively straightforward analysis, is that during that period, around about 6 students were added to the market for every PBSA bed. So quite clearly, and somewhere like Preston, which is not, first tier, I'd argue, most people wouldn't be considering Preston as a location, but what we can see there is that demand has significantly outstripped supply. Now, the reverse of that, I think most are aware, Sheffield is a tough market, but in somewhere like Sheffield, over that same period, you're looking at about half a student, if you can have half a student, added for every new PBSA bed added during that same period. So quite clearly in somewhere like Sheffield, supply has grown at a much faster pace rather than demand. Of course, for somewhere like Sheffield and other locations as well, what it means for PBSA is that if demand growth has not been strong enough, then really what you're going to find is stiffer competition between schemes, as well as the potential need to attract students out of the HMO market to fill that shortfall. Whether or not that is possible will obviously depend on many factors, including the underlying HMO market, what is the pricing in that city compared to the pricing of your particular assets. What about location, for example? So there are a number of factors, but again, whether that is feasible or not will depend on each individual location. Another consideration as well in this particular analysis, this is looking at total demand growth. Again, whether or not that is relevant will depend on a particular scheme. Again, a simple example of that would be if your scheme is priced on average at £200 per person per week, then total demand is not probably the best measure, because most domestic students cannot afford £200, and really you would need to adjust it to look at international growth, which again is going to give you a different outlook. Really, the key takeaway there is understanding local dynamics and understanding the addressable market for a particular asset in a particular location is going to be key for understanding how successful that scheme is going to be. Moving on to the UCAS numbers, so clearing is obviously well underway now, and UCAS actually, during the clearing process, do provide daily updates to their stats. So what we've done is just had a look at some of the key numbers to give you the most up-to-date view. So as I said, these numbers are going to be changing, but it gives us a very up-to-date picture on demand in particular. And these particular numbers have been taken 4 days after A-level results are released. So again, these will change, but it gives us a very up-to-date view. The chart on the right-hand side in particular tells us or highlights the main trends here. And the one that sticks out again, as we've seen in previous years, is the decline in demand from EU students. So this year, at this point in time at least, we're looking at acceptances by EU students down about 14% year on year. So pretty significant reduction again. If we compare the number of yearly acceptances by EU students this year versus 2019, they're down about 67%. So again, a significant reduction. Obviously, Brexit is the main reason for that, and the loss of home fee status for EU students. So it's going to be interesting to see whether we see further declines going forward. UK acceptances were down also slightly, but more positively, particularly for PBSA, is that acceptances from non-EU students are up and actually up by 10.7%. So good positive growth there, which is good to see. Looking at the data in a bit more detail, just to pick out some key locations, obviously China being the big one for PBSA. What I think most be very, very relieved to see is that acceptances from Chinese students are up 25.5% year on year, so a significant jump. India also saw strong growth, or has seen strong growth so far, 15.4%. But it's not all positive. So those from Hong Kong students are down almost 8% year on year. But obviously the key takeaway there is the Chinese numbers are still looking very, very strong, which is great. In terms of demand by tariff provider, and just to explain, tariff provider essentially means universities that require higher entry grades would be classed as a higher tariff provider. What we can see is that for this year, we've seen a pretty sharp reduction in the number of acceptances for higher tariff providers. That's going to partly be attributed to the fact that in previous years during COVID, and obviously where we saw teacher assessed grades, those numbers were likely somewhat inflated. And I think obviously there was a worry, particularly for some of the more prestigious universities, of over-recruiting. So I think it's going to be a temporary blip, but again, I think it's going to be interesting to see how those numbers evolve in the coming years. And I would expect demand growth for those higher tariff providers to continue. Over the long term, though, numbers are still up. If we look at, again, yearly acceptances at higher tariff providers this year versus 2014, what we have seen is that they now equate to about 34% of the total, whereas in 2014, they're about 29%. So what we can conclude from that is that higher tariff providers are taking a larger proportion of demand over the long term. Again, we wouldn't expect that to change probably anytime soon. So what does it all mean for the sector? So we'll just finish on this particular slide before handing over to Callum. So on the whole, things are still looking very positive. On this particular chart, what we have done is we have tracked over time the change in demand as well as the change in supply. Those are represented by the bars, and the lines represent the cumulative change over that same period. And what we can basically conclude from that analysis is that demand is outstripping supply growth, and it's likely to continue to be the case. Obviously, with a pipeline, whilst we're looking at about 120,000 beds at the moment, in the current cost environment, it's highly unlikely all those will be built, and therefore actually the shortage of accommodation is likely to be greater. What is worth noting, though, is obviously that demand and supply growth, whilst nationally looks very favourable from an operator's perspective, as we've touched on previous charts, it does vary significantly by location. There are certainly some locations where demand has outstripped supply, and there are certainly other locations where supply has significantly outstripped demand. So whilst the national outlook provides a very interesting story, if you really want to understand the attractiveness of a particular location, you need to know the dynamics of that particular town or city in much more detail. What we've also done is just a very quick calculation to work out, assuming the PBSA pipeline is delivered, what would be required in the HMO market to make up that shortfall. And if demand were to increase by about 3.5% per annum, then we would require HMO growth of about 3.2% per annum between 2020 and 2025, which is about 28,000 additional HMO beds added every single year to make up for that shortfall. Given, again, all the issues around the HMO market, and I'm sure Callum will touch on some of these shortly, that is probably unlikely, and therefore that shortage, I suspect, as I say, is going to remain going forward. From my side, that's it for today. Hope there's a lot of interesting snippets participants can take away from that. What I'd like to do now is hand over to Callum. And Callum, do you mind just starting with a quick introduction, and then really looking forward to hear what you have to say about the market.
Thank you, Richard. Good afternoon, everybody, and thank you for your time. I'm going to spend 5 minutes going through the HMO market, looking at it through the lens of an HMO operator. But before that, I just want to introduce Student Tribe. So I set up the company in 2014 as a direct result of the appalling Dickensian housing conditions that my children stayed in. Although I probably have to admit that they probably cared less about it than I did, but perhaps that's because they weren't paying for it. So where we are now is that since 2014, we've completed 3 raises. We're in 5 university cities, and we're looking to expand to another 25 cities in the next 5 years with an institutional backer. So what we see ourselves, crucially, is not just as a property investment vehicle, but we see ourselves as a service company. And that, we think, is what is the big differentiator between ourselves and the rest of our HMO competition, who are not in that and are not moving down that road yet. So turning to the first slide, 2021-22, life felt like it was getting back to normal. We started our lettings in October of last year, and by December we were fully let, which gave us a good warm feeling, fully let at the prices at which we had put out there on our brochure, i.e. net rent plus 4%. And we brought forward our utilities, we thought rather cleverly, for 1 year, but now feeling rather stupid that we didn't do it for 2 years, at a price of £16. So for next year, our average price, net price exclusive utilities, is £112.50, and if you add £16, our headline price is £128.50. So I'll come to what our pricing will be as we go into next letting season, which starts in October, but it's quite a frightening prospect, frankly. So just as we thought life was coming back to normal, of course, suddenly we get the Ukrainian situation, we get inflation suddenly rearing its head in a way that, frankly, I don't think any of us thought was likely to happen this time last year. Luckily, construction is not such a big issue for us. We don't build anything, we purely refurbish and renovate. But mortgage costs will be a big feature in the HMO market. Many of the operators are on fixed 5-year agreements with the likes of, let's say, Paragon. So if you booked your fixed agreement in 2018, 2019, You're just about to come in for a very rude shock. And so a lot of HMO operators may well find themselves reaching for the sell button as and when they start to look at what the mortgage costs will become as interest rates continue to rise. So that's an issue for the next 12 months for many operators. Of course, we then had the rent reform white paper, which spells the end of ASTs, which frankly is a bit of a jaw dropper for a lot of HMO operators. I think there are a number of things to be said about that. First of all, it is just a white paper. And even if we do feel hard done by relative to the purpose-built operator, a week is a long time in politics, and there won't be any resolution to this particular white paper, everyone feels, until after the next election in 2024. So there's an awful lot that could come and go between now and then. So, you know, it's a longer term issue for us, but certainly one that is a threat. And of course, the big one out there is the decarbonisation of the residential housing stock. And using the blunt instrument of EPC ratings, the government have said that everybody needs to get their house up to a D rating at least, with a view to getting up to a C rating soon after that. Now, there's very little detail on this. There's certainly nothing in terms of meaningful subsidies and grants. So everybody's slightly sitting on their hands, although we have got all our houses up to C and D rating, with 50% sitting on C and moving the rest up to a C rating as soon as we can. But there are huge costs sitting out there potentially for HMO operators without government support. So we'll just see where that one goes. So where do we go from here for 2023 with that kind of background? You'd be forgiven for thinking that it's quite a tough market. I think the first thing for us all to think about is, in HMO world, is the rents. Where will they go? Particularly because of the utilities situation. Now, I mentioned that we brought forward our utilities package on a per person per week basis at £16. If we were to buy our utilities package now, that would be going up to £33, £35. So it's already doubled. And if we want to try to move our net rent up, I mentioned a price of £112.50 by 4%, then we'd be looking to start our rental letting season at £117 our net price. And if you add £33 to that, then you get to £150 as the total rental headline figure for students in the HMO world. Now, that's obviously going to set alarm bells ringing everywhere, because £150 is quite a watershed mark for HMO operators. It used to be that £100 was considered an expensive price for a room not so long ago. And therefore one has to ask, you know, is this going to stick? It's moving into purpose-built territory, if you like, and therefore the differential in price obviously diminishes considerably. And you have to ask whether operators will be able to achieve that sort of level of price. I think what's going to happen, frankly, is that landlords will offer a price pre-utilities, because why should a student book their utilities now for something that may change quite substantially in the next 12 months? So I think what we'll find is that utilities will be left out there as a risk that many students will want to take on board as and when we get closer to this time next year. And people will still want to go with a net rent increase. But we'll see what happens. Clearly, fair usage policies will be key in terms of, you know, booking something now, and if the utilities price goes up, then the student still has to take the hit, for better or for worse. So we've talked about mortgage refinancing and how that will focus minds, and the government white paper. You know, who knows what's going to happen, but we're not worrying about it too much at the moment. So assuming that we get through the rental period and students continue to come back to HMO properties, which we firmly believe they will, the longer term industry fundamentals are still firmly intact, which is why we feel very much like this is going to be a buyer's market. It's been a seller's market in HMO world for the last 10 years, and maybe that will change a bit for the next year or two as these particular bumps on the road are navigated by a number of the operators. We still firmly believe that Article 4 will prevent more supply. So Richard's figure of 28,000 new beds per annum coming to the HMO market is, quite frankly, extremely unlikely. I don't think the councils want that. Quite the opposite. They want to move HMO houses back to C3 category residential housing. So I just don't see that happening in any shape or form. So with supply limited and demand, we still think very firmly intact. We all know about the participation figures of 18-year-olds. We know about the percentage of 18-year-olds in the population growing up. So we would say that over the next 5 to 10 years, the industry fundamentals still remain very positive for us. We believe that we are an alternative solution for housing. It's not just about PBSA. The domestic students, who are 75% of the overall intake, still like what the HMO offering is all about. And so we feel there's a place for us, but it's going to be a tricky 12 months for us. That is the world in the HMO world for the time being. Thank you, Richard. Thank you, everyone.
Thanks, Callum. Really interesting, particularly around the potential impact of utilities on rent, because it's one that a lot of people are obviously keeping a close eye on. So as we start to get some ideas of rents for next year, so I suspect there'll be a lot of interest in that. That kind of concludes today's session. So thank you all for joining us today, and thanks, Callum, again for your thoughts and insights there. As I said, if anyone does have any questions, feel free to contact us directly. I will be, let's say, distributing material in the coming days, and again, that's going to include the slides and the recording as well. Just gives me one last chance to say thank you very much, everybody, for joining us, and enjoy the rest of your day, and hopefully speak to you all again soon. Take care.